Hi everyone, welcome to the session. In this video, I'm going to discuss about the difference between bonus share issue and a right issue. First and foremost, let's look at the bonus share issue and how we can record this transaction in the books of accounts. Bonus share issue simply means issuing additional shares to existing shareholders without claiming any money from the existing shareholders. So therefore, it is basically done by transferring retained earnings to stated capital or the share capital. Therefore, it is also known as capitalization. So when companies are short of cash and shareholders expect a regular income, then bonus shares are given to existing shareholders. So shareholders, if they are in need of money, what they can do is they can sell those shares and meet their liquidity needs. So this is the basic concept about bonus share issue. Now let's look at some of the questions relating to bonus shares, and we'll see how we can record this transaction. So now let's move on to this particular question. Ramesh Silva and Company statement of financial position. An extract of the financial position is given. Shareholders' equity, stated capital, ordinary shares issued at 1 rupees each. So therefore, the total stated capital is 2 million. Reserves, revaluation reserve is 1 million. Retained earnings is 5 million. So therefore, the total reserve is 6 million. The total shareholders' equity is 8 million. So Ramesh decided to make a 3-for-2 bonus issue. So which means 3 new shares for every 2 already held. Okay. So in this scenario, as I explained you, when there is a bonus issue, basically what you need to do is you need to calculate the number of shares that are going to be issued as bonus shares. So that amount will be transferred from retained earnings. It will be transferred from retained earnings to the ordinary share capital or the stated capital. Okay. So when you say 3 new shares for every 2 held. Okay. Now uh, as per this question, the total ordinary share capital is 2 million. So when you take 2 million divided by 3 new shares for every 2 shares held. So this has to be divided by 2 times 3. So this will be 3 million. Okay. So since I have taken in thousands, so this will be 3 million. Okay. So basically 3 million bonus shares will be issued. Okay. So what is a double entry? If you take the double entry, so double entry will be, so you need to uh, debit the retained earnings. The retained earnings, so retained earnings should be debited with 3000, and share capital should be credited with 3000. Okay. So this is the relevant double entry. So basically this is 3 million. So if you prepare the adjusted statement of financial position, if you take the adjusted statement of financial position, so it will be, first of all you take the stated capital. Okay. So ordinary shares, okay, we had 2 million. So this 2 million will increase by 3 million. This is 3 million. The total will be 5 million. Then under reserves, we have revaluation reserve. We have to take the revaluation reserve and the retained earnings. Okay, so revaluation reserve, there is no change, which is 1 million, and the retained earnings, we had 5 million, of which 3 million has been transferred. We transferred to share capital. Okay, so therefore the total will be how much? 2 million. So therefore the total reserves will be 3 million. The total equity shareholders value will be 8 million. So as you can see, the total value of the shareholders equity did not change. It is same, but the composition of the reserve and the stated capital as a result of this bonus share issue changed, because there is no cash involvement in the bonus shares. So once you issue bonus shares, the shareholders will not pay for the bonus shares. It's merely a transfer from retained earnings to the ordinary share capital. Okay, so therefore we transferred 3 million worth of bonus shares from retained earnings to the share capital. So therefore share capital increased by 3 million, which is 5 million, and retained earnings reduced by 3 million, which is 2 million. Okay, so now let's move on to another question. Now we'll move on to the second question. Steve Fernando Company statement of financial position as at 31st December 2020. The extract is given. Stated capital 10 million, revaluation reserve 7 million, retained earnings 8 million. So therefore the total reserves will be 15 million, and the total shareholders equity 25 million. Steve Fernando Company has stated capital comprising 10 million ordinary shares issued at 1 rupees each. The company has decided on a bonus issue of shares of 1 for 4. Calculate the double entry to record the bonus issues of shares and prepare the necessary journal entries. Okay, now the company has decided to issue bonus shares 1 for 4, which means you have 10 million worth of share capital divided by 4 times 1, so which will be 2,500 or 2,500,000. Okay, so 2,500,000 worth of bonus shares are issued. So therefore what will happen is the retained earnings will reduce by 2,500, 2,500,000. Stated capital will increase by 2,500,000. So therefore the necessary journal entry will be retained earnings will be debited with 2,500,000, and stated capital will be credited with 2,500,000. So therefore when you take the adjusted statement of financial position, so this is the adjusted statement of financial position. So your stated capital will be how much? Which is 10 million plus 10 million plus 2,500,000, so which will be 12,500,000. Then under reserves we have revaluation reserves 7 million, and retained earnings, we had retained earnings, how much? We had 8 million, now reduced by 2,500,000. So which will be 5,500,000. So therefore this will be 12,500,000. The total will be 25 million. Okay, so this is the answer for the second question. So therefore when there is a bonus issue, simply what you have to do is you need to transfer the number of bonus shares from retained earnings to the stated capital or the share capital.